Let's go to our friend Beimnet Abibi from Galaxy Trading. As always, my friend, how are you?
I'm doing great. How are you doing?
I'm great. I'm feeling good. We're since we last talked last week, it's been a material rally in crypto assets.
Yes, it has. It's been a very fun journey.
And now month over month, I think as of today, this is Wednesday, January 18th, I think. Is it the 18th? I didn't screw that up.
I think so.
Today is Wednesday, January 18th. Month over month, Bitcoin and ETH are basically both up 30%.
Yep.
It's a pretty material uplift. I mean, you can see the block clock behind me says we're over 20,000 in Bitcoin for the first time since pre-FTX. So we've, retraced the SBF dump.
Yeah. I would argue that it's just catch up to traditional markets.
Right.
Traditional markets basically since, mid to late October, early November have just been on a one-way tear.
Right. Since that CPI missed to the downside, which was right after FTX.
It was the same day.
Yeah.
NASDAQ was ripping 4+%, 5, 6. It was up like 6% on the day as Bitcoin was collapsing.
Right.
And it's only been going higher ever since as well, with the exception of today. And so, there's a huge catch up, and you look at things like gold, right? Gold went from 1650 around the same time to 19,000 or 1920, right? Other sort of dollar proxies, euro, went from about 1 to 108, right? So you've had huge moves in traditional markets.
And the dollar DXY has come down over that time too. So
yeah, exactly. I mean, that's the same euro. Yeah, exactly. Yeah. And so I do think there's an element of this that is just catch up to traditional markets, dollar weakness, U.S. equities higher.
Yeah.
There's an element that is base effects, right? There's a lot of cryptos that are just sold off so much, like
down 90%, going up 100% after that's easy.
It's super easy, yeah, especially. And then you had just a sheer amount of liquidations, right, from the short side. You're probably, from what we saw in exchanges, you're probably looking at least $500 million of liquidations, if not more. And then I just think when you think about crypto down at such low levels, if you're playing it from the short side, what are you really playing for? Right?
You think Bitcoin's going to go from 16 to 10? That'd be a material.
Tough. Yeah. If FTX and the slew of things that had happened this year in crypto couldn't take us below 15.5, what on earth is going to take us below there? Right. I mean, it would have to be Binance.
That's what I was going to say,
being
because
totally fraudulent.
Just a few minutes ago, they're not, as far as we know. I mean, but just a few minutes ago, the Department of Justice this morning, they had said that they were set to make take a cryptocurrency action. They would announce at noon.
Yeah,
it's 12:30. So a few minutes ago, and of course, there's been talk. There was some Reuters reporting, and weeks ago that I think the journals reported on this too. That there was a dispute among U.S. Regulators and law enforcement about what to do with Binance, and so there's been this hangover on Binance that there could be some kind of action.
Yeah.
And so I think the market assumed that it must be Binance, but it turned out, what was it?
It was a Russian exchange. I don't
know how to say it. Bitslato?
Bitslato or something along those lines.
So it wasn't Binance.
It wasn't Binance. It did start with a B, though.
Yeah, and it was there was a press conference.
There's a press conference. And I'll say, I mean, obviously there was some shady stuff going on with the exchange, but the cynic in me was the government just wanted to do a press conference and say the words Russia, China, and crypto and take a victory lap about something. The only way this would have been better is if they planted some trees and got some carbon offsets. I don't know how else.
Yeah, it's a good story for the government, given the war in Ukraine and the geopolitics, and they seized the domain. They did that thing where they put up a graphic on the website. Now, this, to be clear, I don't think you probably didn't. This is a Russian-based crypto exchange that I've never heard of.
I've never heard of it.
That's why we were chuckling a little bit, because the pre-announcement made it seem this is going to and I think crypto markets were a little bit jittery leading into this announcement, but it turned out that no one's ever even heard of this thing.
Yeah, no, I mean, Bitcoin went from 21,400 to 20,500 pretty quickly.
Right.
You did have an S&P sell-off of material magnitude.
Separate from this,
Separate
but
from this at the same time. So it didn't help liquidity. And so, you did see a bit of retracement. However, we went right back up the moment the market realized it wasn't Binance. I do think that, the kind of biggest thing I'm focused on this year is or to start the year is the January effect. Folks that are benchmarked to crypto and have to invest in crypto, they're probably underweight and are therefore underperforming the broader market. So in theory, that makes them, kind of forced buyers into this market. You can't be a crypto manager and tell your investors that you're not keeping up with crypto performance this year, just because, they probably stuck with you through last year. And so, I kind of do think that there are going to be continued dip buyers, and you are going to get more and more folks FOMOing into Bitcoin, especially the macro types. I think there's a lot of momentum behind the dollar weaker trade. And part of that is just Bitcoin.
Yeah, one way to express it well is Bitcoin.
Absolutely.
I've also looked at I was looking at some on-chain data for Bitcoin, and one of the things I like most is looking at what price coins last moved. It's the simple way of saying it. Really, UTXOs last created for our more technical Bitcoin. Yeah, because it sort of gives you an idea of like on-chain cost basis. Now, I can send a coin to myself or to you that's not a sale, and that would mess the metric up. But there was a huge pile, other than literally $0 to $600, meaning like Satoshi's coins, which is still the biggest cohort because there's a lot of coins that have never moved or haven't moved in 10 years. Other than that, 16.5 to 17.2 is the largest percentage of supply. So a strong base basically was created down there. And what I'd like to see for this for me to get more and more comfortable, I think there's many ways to think about this, but if we hang around these levels for long enough, you'll start to see that base move there and start to form a nice stronger base around 20, right? And that's sort of how, I've got versions of this data that I've pulled at different times throughout the year last year. This looked a lot different. There's basically very few coins that last moved at prices higher than today. Right? Like most of those coins from like the 30s and 40s and 50s and 60s essentially were already sold, right?
Yeah.
Certainly moved technically, but I think it's a decent heuristic.
No, I think that's totally fair. And the other thing to think about is, just the pace of the move you had that happened mainly, between Friday New York close and Saturday Asia Open,
right?
Or like the overnight session.
It was fast.
It was super fast, and it gave very few folks an opportunity to actually buy in.
Yeah. Right.
So if you were constructive of the space, you wanted to get a little bit of capital on to start the year, basically you missed, 10-15% of a move. On an illiquid, like post-Friday close.
This is why,
so nobody's had an opportunity to really buy this back on any dip. And so I do think Bitcoin's going to be supported. And I think your case about, the cost basis makes sense. The other thing to think about is, right, like these low-cost basis Bitcoin or, anything that has remotely like a good average fill level, like you have huge tax implications when you try to sell this stuff. And so, they're like if I'm long a lot of crypto, and I know that if I want to get less long, I have to take a huge tax bill, I'm just going to stick.
Especially if you're generally still long, in your thesis. It also tells me, too, the fact that people feel like they missed this move is like, well, we were down in those levels for several months. Like, you had time.
It was just like bad news after bad news after bad news.
I know.
And really, it's just so tough. To think about
it was a lot of bad news.
It was a lot of bad news, but think about it from this standpoint. Who wants to go like 100% risk on to start the year after the year we just had? It's an impossibly decision to make, right? Like you have to either be super irrational or like crazy genius level, like either 0 IQ or like 200 to kind of make that decision.
Well, it makes sense. It's that left curve, right curve meme, right? I mean, where it's pretty funny though to think about it that way.
That's like, I'm gonna go gung ho, max risk on crypto, Jan 1. Well, that's a bright thing to do.
Right. It turns out. Well, that's what's funny to your point about like the catch-up trade and like the benchmarking to BTC. If you're I think a lot of funds, crypto, like liquid funds, benchmark against Bitcoin is probably the most common. Then some maybe against ETH, some newer ones, but also a lot against like indexes, right? Like the BGCI,
crypto index or whatever.
And like honestly, if you are benchmarked to Bitcoin, ETH, or in particular, you almost but you invest in other altcoins, you probably underperformed.
Yeah.
Or maybe if you're against the index, it's a little bit better because the index is more diversified, right? But that's really interesting. And okay, just a couple more minutes. So we got Fed in like 2 weeks and beginning of Feb. But what do we got like on the macro side? What's the economic data you're looking at in the next couple weeks, or what are you thinking here macro?
Well, we had retail sales come out today. It showed that spending in December was particularly weak from the U.S. consumer.
That's good, right, for inflation, right?
No, that is good for inflation.
Theoretically.
In theory. But again, consumption is 60 to 70% of the U.S. economy. So whenever you see consumption slow down, that's generally like, hey, markets, like pay attention to this. Because
could be weakness in general economy.
Absolutely. Yeah. And if you listen to like, the credit card companies or the bank types, they tell you the U.S. consumer is, right now eating into savings and stuff.
Yeah, and like credit card level, debt levels are very high.
Credit card levels are rising.
Yeah.
Delinquency rates are kind of rising a little bit, but they're still very low. And so basically you play out the current market for the next 6 months, the U.S. consumer might not be in such great shape. And that's kind of what the retail sales data, showed us today a little bit. And you also had, the producer price index data series today that showed softness in prices. But I really, like, the thing I hate about these economic metrics is they're all backward looking, right? This is Jan 18. We're talking about what people did in December. Right.
Which seems like a long time ago, by the way.
Seems like a long time ago. But at the same time, like, what do we know about like Jan 1 to Jan 17 or Jan 18? Gas prices have started to rise again. Commodities have started to rise. Copper went on a tear to start the year. Things like aluminum, have been trading higher. So that producer price index that was really soft this morning,
from December,
yeah. Like you're already like, oh shit. Well, this is probably going to be higher.
Right.
So I'm trying to focus on more of the high frequency data points, like that Adobe price series that comes out, a couple of days before CPI, other metrics along those lines. And, even the Fed admitted this recently, where there was some paper where they were like, we totally underestimated the usefulness of like soft data, which is like survey data, instead of like hardcore, like
economic BLS type data.
Yeah. And like anecdotal survey type of stuff. And so I think that's really important to kind of pay attention to going forward. Now, what I'll say is the Fed has gotten really smart about this stuff, and people like to shit on the Fed all the time, but let's not get it twisted. They're like a bunch of like Ivy League PhDs with a bunch of really smart people working underneath them. And they talk to a bunch of industry folks and smart contacts all the time. So, yes, they messed up on inflation, but they're also some of the savviest people on markets.
Yeah.
And what Bullard said this morning was, knowing what he knows now, all the forward-looking indicators, high frequency points, blah, 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 all that stuff, he's like, we got to take rates to 525 to 550. Which is very aggressive. The current market pricing is only 490.
Yeah.
So his 4 is, 35 basis points above what the market's telling you. And he's saying, the reason he's saying it is because, God forbid, inflation, takes back up again at some point later this year.
Stamp it out. Tamp it down.
He wants just the insurance policy.
Yeah.
Because think about it this way. Let's say you're at 525 basis points in interest rates in the U.S., shit starts to go downhill and we get nervous. well, there's 500 basis points of cutting you can have, like
to get right back to where you said you might be.
Start printing money again, and it's like, what are you really scared
that cushion.
of?
It's the reverse
knowing that you could take mortgage rates from 6% and change right now to 3% overnight.
Right.
And all of a sudden, housing activity will start to pick back up.
Basically, like they can, if they overshoot to the upside, it just gives them more cushion when they need to come down. It's kind of like the opposite when rates were already so low, like into COVID and stuff.
Yeah.
That it was like they had nowhere to go. Like they could barely do anything.
Yeah.
And they remember this back when they were talking about, we were talking about this back when they were talking, not the Fed, but like commentators were like, what if they would have to go negative?
Yeah.
Other central banks worldwide were like, maybe we'll go to negative interest rates.
Oh, man, fun times.
NERP instead of ZERP.
Yes.
All right, well, this is great. Beimnet, as always, our friend. Beimnet Abibi from Galaxy Trading. Thank you so much.